Okay, so last chapter in financial accounting. Are you guys excited?
Woo!
Um, and once you're through this last chapter, you've survived the hardest accounting class, like I told you before. So congratulations, you did it.
Woo! Thank you.
Through a pandemic.
Through
Through a
a
pandemic.
That's a huge deal. That's massively huge. And you know that any of the assignments that you need to complete, you have until the end of June. Just keep in contact with me so that we can figure out and make sure that you're good to go for the end of the class. Because my goal is to have you all pass the class, correct?
Yeah, that's a good goal.
Trying. Okay, in this last chapter, it's financial statement analysis. And the reason why we don't go through financial statement analysis until the very end is because you have to understand the basics and know what's in the balance sheet, the income statement, know the line items and what they actually contain and mean before you can go through and analyze the financial statements. Why is this important for you in general to know how to analyze financial statements? What do you want to know? Why are the financial statements important for you personally as business majors?
Because we'll be able to communicate the information from the financial statements to investors or any important parties that need that information.
Yes. And also, as business majors, you're probably going to want to start investing for retirement, investing for your own personal gains. And you want to know how to look at the financial statements. You want to know what to read in the financial statements and what to look at. You don't want to be the investor that is only focusing on net income or earnings per share. You want to be an investor that's looking at the whole package, what's going on with the company. This semester, one of my students is in my managerial accounting class. Last semester he was talking to me about the companies, but this semester obviously a lot's changed with the stock market. And so his analysis, even though it's very sophisticated, he's finding himself stressed out because so much has changed and there's a lot of uncertainty. So having a strong understanding of looking at the financial statements and what you're reading and what to look for is super important if you want to start investing. Don't invest in a stock unless you seriously take a look at their financial statements, you read through the footnotes. In this chapter, the first part that we're going to look at is the horizontal analysis. So it's the study of percentage change from year to year. So this is looking at 2 different years, or it could be a series of years, a trend analysis. And we're trying to see how much each of the line items has changed. And then we're also kind of looking at the relationship between different line items. So if I see revenue is increasing year over year, then I would expect cost of goods sold to increase year over year by roughly the same percentage. You're making these kind of assumptions in what you know about the company, what you know about the economy, and what you know is happening for this company. And then if your assumptions don't check out, you're going to go back and kind of analyze them further. So the first thing that you do with the horizontal analysis is you're going to calculate the dollar change year over year. We're comparing the base year, which is the oldest year presented, to the newer years, or in this case, it's only 1 year, the newest year presented, which is always going to be written right next to the wording. So you always have the current year closest to the words. So the current year is for the year ended 2020, December 31st, 2020. The base year that we're comparing it to is December 31st, 2019. So we're going to say between 2019 and 2020, did revenue increase or decrease?
Increase.
Revenue increased.
Yep. So we're going to put a positive number. It was an increase of how much? What's the dollar amount? So A B. A minus B. How much did revenue increase?
By 90,000.
$90,000, correct. And revenue increased by 90,000. Cost of goods sold, we would expect it to increase, right? Because if sales revenue increased, we likely sold more units, so we would expect to have a higher cost of goods sold as well. Cost of those units that we sold. So 408,750 is what we incurred in cost of goods sold in 2019. 2020, we incurred 477,000 cost of goods sold. Did cost of goods sold increase or decrease?
Increase.
Increased by
68,250.
68,250. Okay, I'm going to let you do the rest of this row. I'm going to pause recording. Okay, with selling and general expenses, what happened?
It was an increase of 22,000.
Increase of 22,000. Also something you would expect if sales increased. Interest expense, what happened? Went from 13,500 to 23,500 year over year.
Increased by 10,000.
Increased by 10,000. What would cause this increase? Is it due to that increase in sales? Why did interest expense increase year over year? What could potentially be the response from our clients?
Be like, hey, we took out some more loans with some more interest.
There you go. Yep. You took out more loans. They took out new loans this year or at the beginning of last year, or sorry, the beginning of this year or the end of last year. That's one potential. They could have refinanced to a higher rate. But those are the things that we would be expecting. So we would want to see in the balance sheet, are they showing this new debt? If they're showing a higher interest and they're not showing any new debt, that would be suspicious of the fact that they might have debt that's off balance sheet and that they're actually responsible for. So for the Enron thing, you might have caught it here. Income tax expense, 84,650 versus 105,500. How much did it increase by?
20,850.
20,850. Total expenses went from 771,900, sorry, to 893. How much did it increase by?
121,100.
121,100. For net income, what happened to it?
Increase.
It went from 145,100 to 184,100. Actually, I'm sorry. I have an error in it.
184,000.
No, it's not 184,000. I forgot. I didn't correct my PowerPoint. Every year I write it on the board and I forgot to correct it here. So it is not 184,000. If you take 1,007,000 minus 893, it does not equal 184.
Oh, I wasn't even trying to like check like that. I thought
So I, for years, was using it because I didn't check it. And that was my fatal flaw. I had a typo in it. 114,000 is what net income is. I apologize for not correcting that.
That means it decreased.
Correct. Yeah. So
Net loss.
increase in expenses was higher than the increase in revenue for the period. And you can see that here. All of our expenses increased this year. Our expenses increased by more than the increase in revenue. So our net income actually decreased year over year. It went from 145,100 to 114.
So we do have a net loss of 31,100.
Yes, so it decreased by 31,000. It's not going to be a net loss because they still have profit. It's still profitable, but it's less profitable than it was last year. So what is this saying to you? So they probably sold more units, or possibly they sold more units, but they had an increase in the costs, but they didn't pass off that additional cost to their customers and increase their sales revenue this year on a per unit basis. Right? Does that kind of make sense, the relationship there? You saw an increase in revenue, but that increase in revenue wasn't enough to offset against the increase in cost. So their net income decreased, their profit decreased this year. Is anybody reading some of the news about what's going on in San Diego at like taco shops and different restaurants?
You need to explain then. I
The
don't
reason
know.
the reason why I say taco shops is because I read a specific article about taco shops.
I saw that with the burritos, right? The California burritos.
Yep. Okay, so Sergio, what did you see?
I
I
heard
didn't
like
get to read everything, but I just saw the I just saw the headline. I didn't read it.
Okay,
I heard
so-
California burritos were going. The price of California burritos are going up.
correct. And you know it's a big deal in San Diego because
You're lying.
No, I'm serious.
Why?
Be serious. It's not, because it makes sense what's happening. And it seems that it's going to be a temporary thing, especially how they're upcharging it. So in the Midwest, there were huge outbreaks in the meat industry. Yep. So they had to shut down operations, right? So I think it was pork and beef, because the people have to be so close together and they're screaming in these factories because it's very loud. They were having huge outbreaks. And so in order to kind of slow the outbreak, they shut down operations. So when you have a lower supply of something, what happens to the price?
And it skyrockets.
Correct. It skyrockets. So with these smaller shops, fast food restaurants or quick dining restaurants, their margin, what they're making on each sale, is slim. So if beef, which is in a lot of their products, increases in cost, in order to survive as a business, they have to push off some of that additional cost, or push off that additional cost to the customer by raising their sales price for it. The reason why I think it's temporary is because all of the ones that I saw, they were writing it on a sign saying that they're doing kind of a surcharge for the beef. And they explained what was happening. Some of them were just doing it on the receipt. I think showing it up front is probably the wisest decision. But what they're trying to do is just offset that additional cost. They're not making additional money on that. They're not making additional profit from doing so. That makes sense.
Mhm.
But
Well, this Corona thing has gone way too far now, man. This has
know.
gone too far.
yeah, I'm not going to talk more about that, but it's definitely impacting a lot of things. But I wanted to point that out because you would see it here. You would see that their revenue was changing, increasing, but if they didn't increase that price basis per unit, it would actually be just flat or decreasing. And here they would have a huge increase in the cost basis.
So much you can get from just these, one financial statement, man.
Yeah, there's a lot, and you have to remember to don't forget the inputs and what goes into it. So for sales revenue, it's the number of units sold. And I'm writing this for a reason, so you keep remembering this, times the selling price per unit, right? So if you sell more units, you expect revenue to go up. If you have a higher selling price per unit, you expect revenue to go up. For cost of goods sold, we have number of units sold, which is the same as revenue, times the cost basis per unit. So if revenue is flat, if revenue doesn't change year over year, but my cost of goods sold increases, then what does that mean?
Isn't the margin of profit getting smaller?
Yep. Your margin would be getting smaller, so you would see gross margin on a per unit basis decreasing, but you would also see your cost basis per unit. That's the first place that I would go, is say, okay, did you see an increase in the cost of that inventory? If they didn't see an increase in the cost of the inventory, it's likely that there was a mistake. So you can go a step further as an auditor and figure out and investigate pretty easily based on these relationships that we see. Just like with the interest expense, if interest expense increased or decreased, that means that debt changed somehow. If it increased, that means they took on more debt, they refinanced to a higher rate, or maybe the variable rate that they had increased. So you would want to check that against what happened in the market, because variable rates are dependent on the market changes. If it decreased, did they pay off the debt? Did they refinance to a lower rate? All of these matter in relationship to other items. With this information, with just the dollar changes, does it tell you very much about what happened? Can you really make a distinction and determine what really happened year over year with a dollar change? Kind of, sort of, but not really.
You can make some guesses, like a direction of what it might go towards, you know?
Yeah, you can do some guesses, some directional, but it's going to be better to do a percent. How much higher was revenue? How much higher was cost of goods sold? Because you want to see the relationship. If I see that revenue increased by 10%, I would expect cost of goods sold to increase by roughly 10%. And selling and general expenses, I would expect the same sort of percentage change as revenue, based on my knowledge of what revenue is and what is in cost of goods sold and selling and general expenses. So you take the horizontal analysis one step further by taking, and this I'll label C, the dollar change divided by your base year.
Professor, what does that little triangle mean?
Sorry, change. Delta is change.
Okay, I was like, I don't know what that is.
Sorry. Yeah, so we're looking at the change year over year. We're saying, okay, this is how much revenue increased from 2019 to 2020. What was the percentage increase? So we're going to take 90,000. I'll do the calculation off to the side for this first one.
9.8.
Divided by 917,000. How much did it increase by from 2019 to 2020? 9.8%. For cost of goods sold and selling and general expenses, I would assume and make this assumption that if revenue increased by 9.8%, that cost of goods sold and selling and general administrative expenses increased by about the same. So when you take 68,250, the change for cost of goods sold divided by 408,750, cost of goods sold in 2019, how much did cost of goods sold increase by?
16.7.
16.7%. So would this have met my assumption?
No.
Correct. The answer is no. Cost of goods sold did not increase by roughly the same amount as revenue. It increased by a higher amount. And we know that companies can manipulate earnings through inventory costing. They might want to reduce their taxable income, so they expense more of their inventory than they actually sold. That could be a fraud thing going on. Or they could be calculating the cost basis wrong, or they could have included more units sold than they actually sold. So it's something that we would want to investigate further because it didn't meet our understanding of what's going on with the company. If I knew that the company's cost basis changed, if I knew that the supplier is charging them a higher amount and they have been throughout the year, then this would meet my assumption. But at this point, it doesn't meet my assumption given the information. I want you to try to do the rest of them on your own. Figure out the percentage change for each of those.